And we're live. Hello, everyone. Thank you very much for joining. We're going to wait just about 50 seconds so that everyone gets to join, because when you're joining a Zoom webinar of this size, Zoom layers it, so I can see people dropping in, but some others might be waiting up to a minute. So we'll start very shortly. To those of you who are in Australia and gave us feedback about getting up at 3 a.m., if you're here, thank you very much for joining. But if you prefer to sleep, we will make this recording available on YouTube very shortly. And since you signed up, we will also send you a link by email. Now, before we start, please ask any questions you have in the QA section of Zoom, not in the chat. And that's it. Now we should have most of us here. So welcome very much to our latest webinar, how to increase your bottom line up to 60% and earn more as a property manager. Before we start, I'll give you a short introduction to who we have on here. My name is Marcus. I'm the CEO and co-founder of Hostaway. I'm based in Toronto, and a lot of you, if you're our partner, you know us. A lot of customers also know me, but if you haven't met me yet, it's a pleasure to have you here. Now I'll hand over to Maria.
Hello, and thank you, Marcus. Hello, everyone. Nice to see so many people joining this webinar. I'm Maria. I'm the VP of Product at Hostaway, and very happy to have you all here.
And Josh.
And thanks, Maria. Thanks, Marcus. Yeah, glad to be here. Let's see, a lot of people are attending. My name's Josh. I am the VP of Customer Success here at Hostaway. My main job is to make sure that everybody is having a great customer experience along the customer journey here at Hostaway, located in San Antonio, Texas.
Thank you very much. So before we begin, I'd like to tell you why you should stay on this webinar. So we are conducting ongoing surveys with our customers and also our prospects. So every now and then we have a theme, and we ask every property manager we talk to, we ask them about it. And something that we haven't talked about in a few years has been a hot topic recently. It's how does the business model work? How do you make money? And that's something that surprisingly, a lot of property managers, they have a business plan, and they have contracts with the owners, and they know the deal they have with the OTAs. OTA is a term I will be using during this webinar. It means online travel agency. For example, Airbnb is an OTA, Vrbo, Expedia, Marriott is an OTA, and so on. But what we found out is that a lot of property managers, in fact, over 70% of them, have not gone back and reviewed the contracts they have with the owners. And they typically don't change their business model. So they set it up to work in one way, and that's the way it always works. Now, the challenge with that method is that sometimes you simply don't make enough money. And that's what this webinar is about. This is not about how to market your properties, how to hire the right staff. No, this is how to keep your business doing exactly the same, however, make more money into that bottom line. So that's why you should stay on today. Maria, you could show the next slide. So first of all, about Hostaway, we're the leading all-in-one short-term rental software for property managers. And the reason we have the authority to talk about this is that we have thousands of customers that we talk to on a monthly basis. We have offices all around the world. We're a preferred partner of Airbnb and lead partner of Vrbo, premier with Booking.com. Also have Marriott Homes and Villas and Google Travel coming up soon. But most importantly, we help property managers every day set up the software to run their business. And as such, we need to be experts on how to run a vacation rental property management business. And for those of you who are not yet a Hostaway customer, we got a promise for you. If you go on our website and you sign up, we'll get you to talk to someone within 5 minutes. That's right, 5 minutes. And so you can try it yourself. Go on hostaway.com. I promise you we'll be able to evaluate if our solution is right for you. But now let's talk about money, because that's an exciting topic. We're going to split this into a couple of parts, and I'll try to make it short. Try to hold back your questions until the end. We'll have plenty of time there to answer them. But because I'll answer a lot of them during this call. Maria, next slide, please. So here are the topics we're going to do. First of all, we're going to talk just briefly about increasing top line results, because we found out that a lot of property managers have quite some easy ways to increase top line results that do not require any additional investments, and in some cases can be done with a couple of clicks. Then we're going to talk about bottom line results, and then reporting to owners, and then of course we're going to take into account legal considerations, and then see how Hostaway can help you. So now let's get into it. Now, before we start on this, I just want to say one thing. I know for a fact that out of all the participants here, for some of you, what I'm going to say is going to sound incredibly basic, and you know it all already, and that's completely fine. For some of you, it's probably going to be quite advanced. But I can say, as an entrepreneur, there are many basic things that I thought we as a company were doing right, and people kept recommending, hey, you should be doing this. And I was thinking, well, of course, we've been doing that all the time. But when I actually looked under the hood, I found out that, oh, the outsider was correct. We weren't doing that at all. We thought we were doing it, but now that I look at the numbers, I see we're actually not doing it. So even if you are doing all of this, please, if you leave the webinar, at least have a look, open up a spreadsheet to see how does your business operate. So first of all, when I talk about top line and bottom line is how much money you get in, and the bottom line is how much money you have left at the end of the month or the end of the year. And we're going to focus mostly on the bottom line, but there's a couple of simple tricks that we notice that many property managers do not use. First of all, it's incredibly easy to upsell gap days, and you can, if you're using Hostaway, you can do this automatically. This means that when a guest is checking out, you can send them a message and ask, would you like to stay an extra day? And the reason this is so effective is that it doesn't cost you anything at all. If you have the calendar open, let's say even for 1 day, and your booking minimum is 2 days or 3 days, nobody's going to be able to book. But the most important part is the cost of you doing that is absolutely nothing, because after a guest leaves, you have one cleaning. You need to pay for that cleaning. But that's the same cleaning, whether they stay 7 nights or 8 nights. However, the amount of money you get in the top line will increase. And because it's done automatically, it's incredibly effective. If you have questions about that, you can ask later on. Now, another thing we noticed, and this is something that we can do very effectively here, since we have access to all the data, we noticed that consumers are getting more and more picky when they book their reservations, and they're looking for very specific things. However, if you're using Hostaway or any other channel manager, you should be promoting these amenities. A very simple example is if you got a property that's on the beach, you can, maybe you're advertising it as beachfront, and there's a checkbox called beachfront. But maybe someone is looking for waterfront, maybe someone is looking for oceanfront. You need to click those too, because on the OTAs, when someone goes in with very specific requirements, they're going to click the checkbox that they think is good, for example, waterfront. And if you haven't selected that, and once again, this may sound very basic to everyone, but please have a look and make sure that you click all the boxes. This is something you need to do on a regular basis, because the OTAs, they keep updating their amenities. So please go and make sure that for as many searches as you can, be on the top of the search and actually be in the search results at all, because it's so easy to fall out. If you got a beachfront property and you click it as beachfront, but someone searches for waterfront, you're not going to be in it. So please check that. Now, you can always promote additional fees. We'll get in a bit later into how the math works. But with additional fees, you have a very strong way of incentivizing the guest to do the right behavior. And in this case, the right behavior from a guest is one that makes you money, and the wrong behavior from a guest is one that causes you to lose time or lose money. And then I'm going to show you an example on how to adjust the markups per channel, per OTA. And just so we're clear here, the reason why it's so important to focus on this part is that while we're enjoying record occupancy rates and record ADRs, costs are also going up, and getting skilled labor is getting harder and harder, and because there's a lot of competition on the labor market. And that's why you should really have a look and see if you can't hire the people or you can't run a profitable business the way you could last year, then it's probably time to pick up Excel, which is exactly what we're going to do right now. So, Maria, may I share the screen? Okay, we can show here. Yes, actually, yeah, I don't need to share just yet. So I will, after the webinar, I'll share this with you. I have a spreadsheet with 4 tabs where I did some example calculations. And for some of you, when you see these calculations, you're gonna recognize them as beginner's mistakes, but you'd be surprised how many property managers out there are actually using these things. Now, I didn't mention the OTA by name, but there's one here, and I'm going to compare these 3. Now, on the left side of the screen here, you see a property manager that is not using markups, and they're losing money. And on the right side, you're going to see one that has adjusted the markups in just a way that not only does the guest pay the same amount on all the OTAs, but most importantly, they make more money on various OTAs. So first of all, I'm sure when you see OTA A here, you can guess who it is. They start by A. I'm not going to mention any of these because we're partnered with them, but a common misconception from property manager is that this OTA only costs 3% because that's what they pay. So in this example, you see the nightly rates are 1,000 and they get 970 as a payout. Now that's actually not true. They don't charge 3%. They charge between 15 and 18%, or between 14 and 20%, depending on where you are. But the point is, the guest pays 1,140. And I'm going to show you here the worst possible scenario. The worst possible scenario is that you take the payout amount, which is the net amount of money that comes to the property manager, which in this case is 970. And then you split it with the owner. You give 80% to the owner and 20% to yourself. Now, in this case, you make 194. But then you got to consider the cleaning. What about that? Is that going to be paid? So here is a net payout. You make 194. But if you instead take a gross amount, that's this 1,000, and you pay out based on that, minus the expenses, in this case, cleaning. I made this very simple. The cleaning fee here is 200, and the cost to clean is 200. But in this case, you actually increase it to 230. Now, the interesting part here is you think the owner is getting less, but they're not. 776 versus 770. Now, what's the difference here? Well, the difference is that you make about 15%, actually 19% more revenues. I'll get back later on why that's important. Now, if you have the misconception that some OTAs are more expensive than the other, that's actually not the case. Yes, there's some percentage differences, but here, if we compare another OTA which charges 15%, but you need to process your own payments, which costs an extra 3%, then if you just charge the same nightly rate, 1,000, you're going to end up making less, 164. Unless, of course, you do it based on expenses, you're going to make 380. However, here, if you use the right markups, I'm going to show you. On the right side, you see that the guest pays the same amount, 1,140 on all 3 models. And the net amount you get is slightly less on these 2. It's 934 versus 970. But once you make sure that you charge those fees and pay out the owner on a gross model, suddenly your net is higher on the other OTAs. That's right. Those that were initially more expensive, you make 228 compared to 200. Now, you don't see the formulas here. This is why I'm going to share the spreadsheet later on. But this is, I think, the main thing I want to highlight regarding increasing your top line. And yeah, feel free to shoot over any questions in the QA. We'll get to them at the end. Now let's move on to what we came here for, the bottom line. So the number one improvement area that I see with the bottom line of property managers is that there's a lot of costs and fees on the guest, on the property manager, on the reservation, and the owner side. And it seems to be unclear who is paying what. And that's very understandable, especially since a lot of property managers sign different deals with different owners. But this is an exercise you should do. You should really have a look at your average reservation. You should see what are those fees, what are the costs, who should pay for them, and should some of those fees be shared? I can give you an example. Some property managers, they charge a percentage of the total amount the guest pays or the net payout they get, and then that percentage includes the cleaning. Others take it as add a cleaning fee on top, which covers the cleaning. But since the cost of cleaning isn't fixed, sometimes it's 200, sometimes it might be 300. You can't really go back and change a reservation after it happened. So then you need to figure out who's going to pay for that. And something that I haven't yet, it's very hard for me to convince property managers to do this because it does take time. It's going to take you one weekend. But go in and look at the contracts you have with the owners and go in and look at the financial reports that you have. Are you actually doing what you're supposed to be doing? Are you splitting it the way you're supposed to be splitting the money? And I can tell you, every single property manager that I've convinced to do this exercise, to take your agreement and compare it to a spreadsheet, they have found out that they do have some of these costs and fees in the wrong place. And that's something that may benefit you, but that would be fraudulent. But in many times, it just means you might be making less money than you should. All right, Maria, is this the time when I...
Shall I pass the sharing to you?
Yes.
So stop.
On Zoom, only one person can share the screen. So I'm going to share here a couple more examples on this. So first of all, here's the markup calculation I have included. Oh, it didn't copy the formulas from the Excel. I'll do that. But I wanted to show you the impact you can make by having net versus gross fees on Airbnb and what difference it can make. For simplicity's sake, I'm going to use just one reservation here that cost 1,000 for the nightly rate. Now, nightly rates, that's the amount that you pay for every calendar day that you're staying, but then there's other fees. And the way the OTAs will display this changes. It can change even based on regulation, the country that they're booking from. But here's the basic breakdown. So we have here a property manager that is taking an amount from a guest that's paying 1,450, and the property manager gets 1,233, and then they have to pay the cleaning. They get net 1,033. Now, what they're doing is they're giving 20% to themselves, and the owner, they're giving 80%. Now, their gross income will be 444, but then they have to pay for the cleaning, which they got on top here. And they're left with 247. Now, if instead of doing this, they actually split this down further. They had an extra person fee of 50, pet fee of 150, a damage waiver of 50, and then lowered the nightly rates and kept the cleaning fee the same, the guest would end up paying 1,450. And in this case, the owner and property manager share would be based on the nightly rate, which is 1,000, instead of, in this first property manager's case, instead of the Airbnb payout. Now, the effect on this is massive. The gross income doesn't increase that much. It goes from 447 to 650. But the net income, which is the money that's left on the bank account, that is huge, because it goes from 247 to 450. And this is something that most contracts that I've seen with owners, they either don't specify this or they specify it in a vague way. But if you're currently making 247 net per reservation, and it should be making 450 based on your contract, then I think it's time for you to have a sit down with yourself or your team and discuss, should we go for 247 or should we take 450? And keep in mind that the guest pays the same. This is not about how to optimize your listing. This is the same property, the same guest, same reservation. But this is about your business. Should you make 450 or 247? Probably the answer is something in between, but what you definitely shouldn't have is that one property makes you 247 and another property makes you 450, because that will make it very tricky for you to scale your business. Now, if we go into direct bookings, I'll show you here. This is based on a real example that we found where the property manager hadn't really thought about it. This was someone who set up a website and they started advertising it. They were able to get direct bookings, which is absolutely fantastic. But they treated the total amount that the guest pays as a payout. And this is how their financial formulas were set up. And because the payout was the same that the guest pays, 1,450, they got 290 of that. But then they forgot the cleaning fee, 200. And they also forgot that when they get a direct booking, they need to pay $44 to Stripe just to process the payment. So they were actually left with $47 for this entire booking. Now, when you look at it, in theory, their top line was 290, but they were left with 47. Now, after restructuring, and this is the same, by the way, this is the same fee structure for both of these. This is what's shown to the guest. The guest pays the same. But once you restructure it and make your share a bit lower here, 200 instead of 290, all of a sudden you see a massive difference here in the net income. It goes from $47 to 407. And just to highlight what this can look for a fairly small property manager on a monthly basis, you might have 10 properties with 30 bookings in total. Now, this is just an example. Your net income goes up, and then the expenses you have are probably at this level, your own salary, plus maybe a virtual assistant. And then you have some utilities. If you're working from home, you probably have cell phone and electricity and so on. But as you see, the difference is massive. One property manager is making 900 at the end of the month. The other one is making 7,000. And I'm mentioning this, because we're a software company, and this property manager is paying $50 per listing. Now, if you only have 900 left, Hostaway is a very expensive solution because your 900 becomes only 400. However, if Hostaway helps you here get to this 7,000, and then you remove 500, you still have 6,500. So you're way better off than if you had 895. All right, I'll stop the share, and then Maria can share the last slide. I know. Yep. I hope I'm resonating with you here.
Marcus, some people are telling us that maybe they need some more explanations. Maybe they also, if you guys have any doubts, you can ask the question in the Q&A, and maybe we can go to a specific example as well after the
exactly.
After this. Okay, so let me just give me 1 sec to just reshare.
Yeah, I see some questions coming in the QA. They're absolutely fantastic, and I'm sure we can answer those. To those of you who this is confusing, we'll share the spreadsheets, and if you're a customer, just book a call with our customer success team, and we'll see how we can help you. And also, once again, this is
if I may, Marcus, just to all of these cost, fees, markups, etc. They're visible on the Hostaway platform. You can set them up to match your business model. The same way, I'm sure you've seen other webinars that we did relating financial reporting, but maybe we can have another look at it at the end of this one. Our system will be able to copy what Marcus is saying here, and basically helping you creating this spreadsheet and helping you understanding your business.
Very good point. Yes, this is what Hostaway is built for. And just to comment on a few of the questions here, I'm not telling you what to do here. This is something that you have to figure out yourself. However, you should be asking the questions. When you have these fees, you should be discussing among your team, among yourselves, okay, how are they divided? But let's take the next slide. I think there's one major decision that every property manager has to make. And this is something that we've also seen that many don't take into account. Yes, this one. So this is on reporting to owners, net versus gross. So remember how in the example, the guest is paying 1,450, but actually the nightly rate is only 1,000. And my spreadsheets didn't even include taxes. Now, the gross revenue would be 1,450 because that's what the guest is paying. And I know that's not even what the property manager is receiving. For example, if it's Airbnb, the guest fee is never shown, and then the host fee is removed before it's paid out. However, if you're working with gross revenues, and I think for most businesses, that's what makes sense, then you have a lot of advantages. First of all, owners will be able to see a higher booking volume. What it means is, for example, for a booking or for a property, you might have 60,000 in gross, but only 40,000 in net revenues. Now, why is this good for owners? Well, it's very simple. When they're about to sell their property, they can say, this one brought in 60,000 in bookings for this year. And that's a lot more attractive than 40,000. And it increases property value. Also, it's a lot easier to set up the financial reporting if you separate the nightly rate and work with the gross revenues rather than the net revenues. And the reason why it's simpler is that the net revenues depend on which way you got the booking. If you got it on one OTA versus another, or a direct booking website, it's very different. Most importantly, the property manager makes more money. I saw a comment there about someone who pays a fixed rent. Yes, if you don't share the revenues with the property owner based on a formula, then no, that's maybe not effective for you. But just to make it clear, we want you to make a lot of money here, and what we're seeing is a lot of money left on the table. And that shouldn't happen unless it's a business decision, but that's a decision we want you to make. Most importantly, additional expenses won't come out of the property manager's pocket. This is something that we see quite a lot. Unexpected situations happen. Things change, fees, costs change. Who should pay for that? Well, if you're working with gross revenues, then you won't be the one who has to pay. And ensure that you include all the fees related to the booking. This includes channel distribution costs. This is something that we see that big property managers are doing, but small ones are not. And one example of channel distribution cost, just like payment processing cost, is, for example, the fee that you pay for a software such as Hostaway. That's something that it's clear for the property owners that they pay for the channel distribution because many of their previous property managers have done that. But this is something that you can all add there if you choose to. You don't have to share the expenses with the property owners, but I'm just saying, if you want to, let's take a look at the legal considerations there.
Yeah, and maybe just to add to that, we are able to track all the fees related to the booking, right, in Hostaway. So all the channel distribution costs, all the fees for the different OTAs, the strike fees, payment fees, etc. You will find them on the Hostaway reporting tool.
That's a very good point. All of these fees are already tracked, which means you don't need to make any changes. You can just make a hypothetical scenario like I just did there with one property manager who increased their bottom line from 700 to 7,000 for 1 month. You can do that exercise just by downloading the spreadsheet straight from Hostaway. All right. Now, legal considerations. So what we found is that a lot of property managers don't have consistent agreements between the owners. And considering the nature of the business, a lot of it is based on who you know or where you are. You know, in real estate, it's location, location, location. However, this is pretty bad for business. Have a look at the contracts that you sign with old clients versus new clients. If they're not the same, that's a discussion you need to have. And the reason you need to have that is that it's just best business practices. You don't want to have different, basically what it means is you're running different businesses. And I know that there's probably one owner that has a lot of properties and had special requirements, but see if there's any way you can consolidate it. And if all your property owners have signed the same agreement and you have the same service level agreement with all your customers, things will just be easier. Then what we found is that most property managers actually don't check these until something happens. And sometimes they can have language that's no longer valid. A good example is Airbnb introduced AirCover that can produce extra expenses for a property manager. Now, who pays those expenses? Probably there's nothing in your contracts stating that, because you didn't know these expenses exist until a few months ago. But that's why it's important to revisit these things. And something that we hear quite a lot is when we suggest something, we hear that, oh, the owners wouldn't approve. And well, you're running a business. This is your business. Keep in mind that today's situation, I think you have the power, not the owners, because the owner of a vacation rental is facing the same increasing costs. They have increases in property insurance. They have increases in energy prices, probably labor cost, and they need to fix the roof. That's going to be more expensive than before. As a result of it, they are more and more, oh, not to mention interest rates, they are more needed to get the income from a property manager. And this is especially true for people with multiple properties who don't have the option to simply take over the property management aspect themselves, because with many properties, it's a full-time job, as I'm sure you all know. This means you have the power, and you should use it to your advantage. If you have made agreements with property owners that are not, so I've even seen agreements where property managers are losing money with every reservation, then you shouldn't do that to yourself, especially not now, because right now you have the power. A few years ago you didn't, but now you do, and this is why I'm telling you to use this to your advantage. However, you don't really need to do much, because most of the contracts that we've seen between property managers, property owners, they are quite vague. So it's possible, and this is what I mentioned at the beginning of the webinar, it's possible that you are actually underpaying yourself based on the agreement you have, and you just didn't notice it. And if you're recognizing yourself, don't judge yourself. It happens to every business. Every business makes a mistake that's negative to them, and sometimes they make a mistake that's positive to them. But it's something that you should be aware of. These things happen. All right. Now, here's how Hostaway can help you. So, Josh, could you share a bit more about how the customer success team operates?
Yeah, so first of all, great content. Get a lot of questions coming in, so I want to leave time for that. But One of our values here at Hostaway is our customer success is our success. This is why we're kind of sharing this to you today. So that means not only helping you out with our platform, but your business in general. So based on our industry knowledge, as Marcus said earlier, if you're a current Hostaway customer and would like for a customer success team member to take a look at your business setup, as we did here in this webinar, or maybe even get advice on how to get more bookings, we're more than glad to help at any time. We are very high level partners with a lot of our major channels, all the major channels. So we even have optimization guides that we can share, and also know certain tweaks in our platform that we know, as Marcus mentioned earlier, such as tweaking the amenities that can increase bookings based on channels. So feel free to reach out, customer success at hostaway.com, and we'll grab a CSM to take a look at your setup.
All right, thank you. And I'm looking here at the questions. So yeah, one thing I wanted to highlight is that our financial reporting and the owner statements that we have, they are flexible. They are built to accommodate many different setups and different business models. And as such, it might take some time to set up, but we will help you with that as long as you know your business model. But now let's get on to the questions.
All right, I'm going to stop sharing then.
All right. Okay, so first of all, Gabriel asked, he said he's a bit lost, but he'll watch the video again, and we're gonna share the Excel example, right? Exactly, we're gonna share this with you. I need to copy the formulas into Google Drive, and then I'll share the document with every one of you. Lara asked what costs I'm referring to with AirCover. So with AirCover, we have had reports from property managers that that guests are able to get a refund or even relocation cost paid by the property manager if they're not happy. And well, that's a cost that could happen, that we've heard of. Now, here's a really good question from wait a second. Yes, Connor asked, don't you feel that fees such as pet fees and extra guest fees should be commissionable? I think this is a fantastic question, because this is a question that you really should be asking yourself. Okay, you're charging extra guest fees and you're charging a pet fee. Now, why are those being charged in the first place? For example, an extra guest fee, it could mean that you know from experience that in this property, once you go above 6 people, they're going to find more things to ask about and you need to spend more hours on it. Then the question is, should the owner make more money on that when you are the one who are paying all the expenses related to answering those questions? Well, that's again a question you need to answer yourself. About the pet fees, maybe the pet fees are something that are put in because you found out that pets tend to produce more wear and tear on the property itself. And then if the owner is the one paying the bill, is it fair that you get any of those pet fees? Maybe not, but once again, that's a question you should be asking yourself. So when you add an extra fee, you really need to have that answer in hand. Why are you adding this fee? What is it for? Why do you feel it's necessary? What value do you think the guest gets from it? And then how should it be divided? First, start by looking at the contract you have with the property owner, but I can guarantee you that it's probably extra person fees are not mentioned there as a separate part. Then you need to be the one, you need to be the expert who answers that. And it all depends on your business model. Now, anonymous attendee asked a question. I think this is for Maria. Do you have a system to run a full team maintenance?
Yes, so we have a system of tasks and it's a system to create jobs for maintenance and cleaning. And this system allows you to automate the creation of those jobs, and then also track the time that someone's spending on the job, because you will know when they started, when they completed, etc. Keeps tracking on checklists, also keeps tracking on costs, and those costs also can be tracked in financial reporting as well. So yes, we do have a module for that.
Good. Then I saw a couple of questions here also from Maria. Jordan is asking, saying we are very new to Hostaway as owners with 2 properties. How do we promote additional fees and day extensions automatically? Which tab is that under? Maybe Maria, you could give a brief overview of all these extra fees, because it's a good point. I was only covering the part of how you internally manage the accounting part, but then again, these need to be advertised on the OTAs, and all the OTAs have different setups.
Okay, so let me quickly share the screen then, very quickly. Let's see if I do it correctly. 1 second. All right, so, okay. Here. Zoom is not being friendly to me just now. Okay, here we are. All right, can you see my screen? Can you see my screen, Marcus?
Yes, we can.
Sorry. All right, so basically to promote amenities and fees, it's a configuration. It's a configuration of the listing. You can use our bulk update tool as well to copy this configuration to all your listings under your portfolio, or you can go one by one. So the way to do that is basically go to the listings menu on the main navigation, and then click on edit on an appropriate listing, and then navigate basically to the corresponding appropriate tabs. That's amenities. We support hundreds of amenities for all the channels, so Airbnb, Vrbo, Booking.com, even Marriott as well, for general accessibility, bathroom, children, entertainment, etc. And all you need to do is just to check the checkbox, probably also like the checkbox of the appropriate amenity. I remember, I think the top amenities for Airbnb are pet-friendly spaces and Wi-Fi and free parking, if I remember correctly. And for Vrbo, it's free, pet-friendly spaces as well, and Wi-Fi. So for people like me that we work remotely and we work from many different locations during the year, definitely a good Wi-Fi is important. So you can come here, you can check those, and then click on Save. You will have another tab called Save and Export, and it will export to Airbnb. For Vrbo, we export every 24 hours, so there's nothing for you to do. On the fees, we have another type called price and fees as well. This configuration can be copied to all of the listings. Maybe you have obviously different base price per listing, so you may want to tweak that independently. But in here, in this section, you can add the base price for all the channels, markup as well. So you have now 15%. This is my test account. 15% for Airbnb. On Booking.com, I can actually update rate plans. For Vrbo, also I can add a markup for the direct channels as well. Direct channels for us are the booking engine, some partners, actually the big websites for our customers, and whenever you enter a direct reservation. You can add price per extra person, decide when it's going to apply, refundable damage deposits, cleaning fee, short-term fee. So we support the specific fees for Airbnb, Vrbo, and then we have also fees for our direct channel. So the standard fees for Airbnb are also covered here: resort fee, community fee, management fee, and linen fee. Remember that these fees are included into the base rates, so the guest actually doesn't see a resort fee per se. It's added to the base rate, and linen fee which is added to the cleaning fee. But on our financial reporting, you will have these broken down, so you will be able to understand what kind of revenue you're getting from these fees as well. Pet fee, very important. We also support custom fees for verbal. These are late checkout fees, additional cleaning fee, insurance fee, pet fee, and service fee. So you set them up here. You choose whether to include the fees on the base rate or not, similar to what Airbnb does, but that's your choice. So basically what it means is that the fee will be added to the base rate, so it's a bulk amount that the guest will see. Or if you don't, then they will see it broken down on during the booking process on verbal. And that's that. You can add more fees for our direct channels as well. How it looks like for our direct channels, actually, I have something prepared. If you allow me, Marcos, and Zoom too. I don't know how to get rid of the. Do you remember how to get rid of this?
The sharing?
Yes. Hide video panel. Hide floating menu controls. Okay. So you can, on our direct channels, you can sell those, upsell those services and fees, or products rather, right, through the booking process. So you set them in the listing like non-mandatory, which means that during the booking process, the guest will see those fees here. For instance, if they need a late checkout fee like this, and it will be, when they check the checkbox, they will be automatically added to the price. And the only thing they need to do then is just enter the guest details, pay information, and confirm the reservation, and that's it. Anything else you want me to show here, Marcus?
No, I think this is an excellent overview of where to set up the fees. There's a lot of questions here. Josh, were there any that you wanted to take? There was one for customer success.
Yeah, I've been answering them as they come up, but yeah, basically, if you need to reach out to the customer success team, the email's in the channel now. But as far as there's some questions about how long is onboarding taking, and it just really depends on how many listings you have and your tech savviness. So we're seeing them around 2 to 3 weeks, but it really just varies. But those have been answered.
Yeah, here's a question from an anonymous attendee regarding damage waiver fee. This is something that many of you know exactly what it is, but it's also something that some of you may not have heard about. So a lot of properties, they require a damage deposit. Typically, it can be quite high. It can be $500, even $1,000, and then maybe the guest gets it back, maybe they don't. But one way that property managers can make extra money is that instead of charging that, they'll charge a so-called damage waiver fee. It means you do not have to give your 500, instead you pay 50, and that's all you'll pay. If you cause any damage, you'll still end up paying 50. For just as an example. Now, what the property manager then can do is they can take all the risk themselves, or they can go to one of our partners on the marketplace. We have their insure guest, we have Safely, we have Superhog, and buy an insurance for that stay. And then either they get a cashback on the price of insurance, or the insurance is cheaper than the amount they're charging for the damage waiver fee. So that was a really good question. I would not, under any circumstance, recommend becoming your own insurance company unless your volume is thousands of reservations every month. Because if you don't have thousands of reservations every month, let's say you have 1,000 reservations a month, and then you charge 50 from each. With 50,000 extra a month, you can do something. But if you have less than that, you get even one damage for a few thousand, you're gonna just lose money. So don't go uncovered. But really good question here. Then we had a question from Emil. What's the best tips to attract new customers as a new property manager? The one thing I would recommend is imagine yourself being a new property owner, maybe in a location that you don't live in, and then just go to Google and Google Airbnb management for that location, or vacation rental property management company, that location, and then see what comes up. You might identify a weak spot in the competition where they don't have those keywords that you just put into Google in their title of the website, and you can create a website like that. There's also a lot of, if you're in the US, there's an excellent service called Wintory. They keep updated records of when properties change ownership, and that's the best time, especially in traditional vacation rental markets. That's the best time to reach out to the new owner and say, hey, we're offering our services. And yeah, Wintory has done a good job that if you're not in the States, maybe there are other public records that you can find and reach out to new owners. Something that does work, and this depends a bit on location, but just dropping flyers in the mailbox. It actually can work surprisingly well, especially if you do it at the right time. You don't want to do it when guests are there, but you would rather do it, for example, when the season is over and all the owners are there cleaning up or making improvements. Maybe just go and talk to them, see if you'd like them to rent out their place. Now, there was a question here regarding financial hygiene. Should I be using trust accounting to help manage my cash flow? And also a lot of very specific questions about should I lower or increase my commission, and which fees should I charge here and there. Overall, I wanted to say that if this is confusing, then that's actually a good sign. You should be asking these questions from yourself, and as property managers, you have really a lot to be expert on. You have to be an expert at photography, at copywriting, at real estate, at hospitality, at travel and technology, accounting and legalese. That's what you need to be an expert on. And it's just a fact that unless you're a superhuman, you can't be an expert in everything, but there's probably people out there, there's forums where you can go and ask more questions about about the legal and the accounting aspect. Now, overall, I would recommend that if you have a really successful business that's growing, that is the time when you really need to figure out and put these different business models into a spreadsheet. There was one person who said that it makes sense that all the revenue goes to the property manager and then they pay the cleaner. And if your spreadsheet, when you put up the two different business models, one where the cleaner is paid by the guest and one where the cleaner is paid by the property manager, if those spreadsheets produce the same result, or if you get a better result with your existing model, then you should continue with your existing model. And if the other model brings you more money, you don't have to choose it. You don't have to change things, but you should be aware that you make the decision to make less money. And sometimes there's a very practical reason for doing that, but it's still good to keep in mind, because let's say your customer demands that it's done in this way. But when the next customer comes along and it's time to sign a contract, then you know what you put in the next contract. That's why it's important to think about these things. And the more successful and the more you grow, the more important it is to think about these things, because what you don't want to happen is that you find out that you made $1 million last year, and then all of a sudden someone points out, hey, if you had just changed the formula here, you would have made 2.5 million. Why did you give up 1.5 million? That's what you don't want to happen. So like I said, when you're successful, when you're growing, that's when you need to start thinking about these things. All right. Now we have only a few minutes left. Maria and Josh, are there any questions that you'd like to answer live?
No, actually, I think I finished all my questions in the time you were talking.
Same.
All right. Well, thank you everyone for joining. We'll post a recording. We'll also follow up with a link to the spreadsheet so that you can all use these examples and explore further. But I recommend setting it up from scratch by yourself. Ask a friend who's really good at Excel, maybe someone who's good at setting up business models. Spend a weekend on it and see, are you really getting the most out of your business? Sally asked for the name of Wintory here. Wintory is the one who keeps a database. And many of you have asked, how can you get in touch with us if you want to see a demo of Hostaway? The easiest way is to go to hostaway.com and fill in the form there. Tell us how many properties you have and when you'd like to be contacted, and we'll get in touch right away. So thank you everyone for joining this webinar, and see you again next month.
Thank you everyone. Bye.